Loss aversion bias is also known as the fear of losing. And this is something which is natural to humans. It's natural for traders. Who likes to lose? Nobody does. It's naturally ingrained in us ever since we were little, whether it be a sport competition, it sucks to lose. Nobody wants to lose. Whether it be a trade, no one wants to lose on a trade. Whether it be a family or relative, we have a fear of losing. We don't want to lose that because we look at a loss as it's going to bring us pain, it's going to bring us emotions, and it's not something that no one wants to experience. So, because of this, it's natural for us to try to avoid pain at all costs. So, for us to avoid pain, we have to avoid losing. Us as traders, we take more pain with losing than pleasure with winning. I see this all the time. So you take a winning trade, you're like, good for me. But you take a loss and you take a lot of pain with it. It affects you mentally, it affects your future decisions more than a winning trade does in boosting your confidence and giving you pleasure. This is because you're emotionally attached to the trade. And if you become emotionally attached to anything in life, and anything in trading, it's going to affect your logical decision making because you have your emotions, you have your thoughts, and you have your feelings tied to whatever decision you make. And this is especially true when your hard-earned cash is at stake. So I've seen a trader that did not have success with, normal, real live trading with their real hard-earned cash. As soon as they went to a paper account where emotions were not involved at all, they saw success. So what that was telling me was that their emotions were the only things stopping them from seeing profits and from them seeing consistency in their trading. So do not let your emotions affect your logical decision makings, and it's made possible because we don't want to lose our hard-earned cash. As you can see from this picture here, we get more pain from a loss than we do with pleasure from a gain. I don't know why, but it's just natural for us humans. We have a gain and we get very optimistic. We get very hopeful. We think the profit's going to climb. We get greedy. And then all of a sudden we take a loss. It starts coming down and, we start freaking out and panicking like this guy does. There's three things that loss aversion bias will become present in. So instead of closing a trade and cutting the loss, you wait and hold a small losing trade for much longer, which eventually becomes a large losing trade. We do this to avoid pain, currently, but in reality, we tried avoiding pain, and this is going to enable us to feel a greater burden and feel more pain. So let me show you an example really fast. Let's say we have the S&P 500 coming down into demand. We start bouncing, we have buyers' interest at demand. We start coming up and we take the trade long. So before we get into the trade, we obviously have a plan. We know where we're going to exit if we are wrong based off of the chart. In this case, just hypothetically speaking, let's say our stop loss is below low a day at 3320. So we're in the trade long here at 3330. Our stop is 10 points lower at this point, and we're trading, let's say, the SPY equity or SPY options. So at this point, we're long. A couple of minutes later, the market starts coming down, it starts reversing and not moving in our favor. So right here, next candle, we come below where our original plan was and our original stop loss. But because we were stubborn and because we did not want to take a loss, we did not want to feel pain, we wanted to feel somewhat of an avoidance of this pain, we hold on to this trade. So what at one point was, let's say, $100 loser down here when our original plan would have triggered wrong. Now we're holding the trade in hopes that we're going to come back up. So we're trying to be optimistic that the stock is going to move in our favor and not move against us. We're holding onto a losing trade. We're bag holding. And, the market just keeps coming down without any signs of buying. And then at this point, we're like, screw it. I'm going to stop out here. My at one point, which was a $100 loser at the red circle, is now a $1,000 loser down here. And now I just took a really, really big loss because I was trying to avoid pain and I did not close the trade. I did not cut my loss. I did not follow my plan. And I held on to a small losing trade for much longer and it became a very large one and it affected my account. The second point of loss aversion bias is instead of following your plan to begin with, you trade your profit and loss instead of following the chart. And this results in you closing out a winning trade for a loss. So if you do this, you're deviating away from your trading plan. If you deviate away from it, what's the point of having a plan to begin with? It's irrelevant, and this will turn a very profitable system into a mess solely because you made it a mess and you made a decision not based off of the market, but you made a decision based off of your emotions and what you thought was going to happen. So here's an example on the S&P 500, and let's just say we're selling off into demand. We see some type of, buying down here. We take it long. Our stop loss is below the low once again. So a couple minutes later, we're in profit. We're up, let's say, $500 at this point. We're in pretty heavy size. And then a couple minutes later, we're still hanging around here. We're up maybe $400 at this point. We're pretty happy. We're feeling confident on this trade. We're looking back and forth from our profit. We're seeing it fluctuate with the chart. And if you look at your profit while you are trading, it's going to psychologically and subconsciously affect your emotions, and it's going to make you make decisions to try to protect yourself out of fear or out of greed because you want to try to make more and squeeze more out of the market. So if the market now is coming down in the next couple of candles, instead of following our plan, we see at this point now we're down, let's say, $50. So not even a lot of money. At one point we were up 500, but now, we don't give the trade enough room to breathe. We look at our profit and loss, and we see we're down, $50 now. And psychologically, what was once a decent winner, I made $500. I'm up $500. That's more than I would have made at my day job today. Now I'm losing money. What am I going to do? I got to protect myself. I'm going to sell here for a loss. So now you sell all the way down here for a small loss at this point. It's nothing too big, but it's going to make your system into a complete mess because if you just followed your plan and did not trade off the profit and instead just traded off the chart, we would have had a nice winning trade. We might have hit our target at $3,400. And what was a $50 losing trade here, we never stopped out. We deviated away from our plan. Now, this would have been a $1,000 winner, and we would have been very, very, happy. We followed our plan, we followed our system, but we turned it into a complete mess, and we traded our, profit and loss, which is not something I recommend. And if you stop looking at this, I'm telling you, it's going to turn your trading completely around. And then the last point is, if you're afraid to lose in the first place, you're never going to put a trade on. So if you see your system triggering, you see your edge present, you feel comfortable, you feel confident in the trading setup. But if you're afraid to lose your money, your hard-earned cash, you're never going to put a trade on. And it's common sense, it's obvious, but if you never put a trade on, you're never going to make money. You have to risk in trading. Without risk, there's no reward. If we can't accept the risk and follow our risk, we're never ever going to make money. The best traders put trades on. They do not know what's going to happen next, but they respect their risk. They're not afraid to lose, and they know that if they follow their plan, they're going to have consistency in the long run, and they know that losing is just a part of the game. A couple ways to avoid this loss aversion bias is to understand that trading is a complete battle. It's you versus you. It's not you versus the market. If you think that it's you versus the market, then you're just setting yourself up for failure. Your biggest enemy is yourself. You have to overcome yourself, and you have to defeat what's going on in your head. If you let these emotions, if you let these thoughts take over your rationale, if you let it take over your decision making, then your performance will 100% suffer. You have to understand that losses are a part of trading, just like winning is. Losses are the yin and yang with winning. You have to change that mentality. Winners cannot exist without losers. You have to lose in order to win. Once you realize this, you're setting yourself up to win. Also, if you do lose, and it's normal, you're going to lose. No one does not lose. And if you don't lose, you're a complete robot, and tell me what you're doing, because I even have losing trades. The best traders do as well. So you have to take losing trades, and you have to view it as a win only if you followed your plan, you understood your emotions, you did not let it affect your rationale, and if you learned something and you could take something away from it. Journaling will help with this. Journaling will make your losing trades be winning ones as long as you reflect based off of your losing actions. If you reflect with your actions, you're going to see progress. If you do not learn from what you're doing wrong, your losing trades, your mistakes, then you're never going to propel forward. You're never going to see progress. This goes with your winning trades as well. You have to have action because action is either going to bring a losing trade or a winning trade. You have to reflect on that. And once you reflect on that journal, you're going to see progress. It's going to be guaranteed. I cannot stress this enough. Accept it. You're going to free your emotions and you're going to free the fear of trying to lose. That's loss aversion. Without execution and risk, trading is not going to exist. You have to put the trade on and you have to understand that risk to put the trade on, or else, that trade is never going to exist. Therefore, to sum it up, losing is part of the plan. All you can do as a trader is follow your plan, stay patient, and be disciplined with zero emotions involved. Once your plan is set, you let it work itself out. If it works, beautiful. If it doesn't work, learn from it, see what went wrong, understand the common denominators, maybe remove it from your trading, maybe use it to improve for the future. But as soon as you make an emotion get involved, you make it affect your patience, affect your discipline, you're going to completely deviate away from your style, and you're going to take a lot more losing trades. Just follow the plan, trust the plan, and follow your system.